Add up every coin, every banknote, every dollar and euro and yen, all the money that exists on the entire planet. Now add up everything the world owes. The debts are far bigger. In fact, the world owes about 3 times all the money there is. There isn't enough money in existence to pay it all back, not even close. And yet, nothing stops. The shops stay open. The machine keeps running. A world that owes 3 times more than it owns should have collapsed a long time ago. Instead, it's the only thing keeping the lights on. We're here to ask the simple question behind everything worth anything. Why money? So, why is the whole world built on debt? We're taught that debt is a mistake. A person in debt is in trouble. A country in debt is failing. But that can't be the whole story. Because if debt were simply a wound, the richest countries on Earth would have the least of it. They have the most. The biggest economies carry the biggest debts. On purpose. So forget good or bad. The real question is stranger. What is debt, really? And why does the entire world run on it? Start with what debt actually does. Imagine you want to build a bakery. You need an oven, a shop, flour, a sign. That costs money you don't have yet. Without debt, you have one choice. Wait. Save a little every month for years until you've finally earned enough. With debt, you do something almost magical. You borrow against the bakery you haven't built yet. You build it now and pay it back with the bread you sell tomorrow. That's the whole trick. Debt moves tomorrow's earnings into today. Now multiply that by every shop, every road, every home, every factory on Earth. You don't have a problem. You have an engine. Now here's the part almost nobody notices. Every debt has 2 sides. When you borrow, you owe, that's the debt. But somebody, somewhere, is owed. And to them, that same debt isn't a burden. It's an asset. It's their savings. Think about your own bank account. It feels like the bank is holding your money, but really the bank owes you that money. Your savings are the bank's debt. Your pension, your bonds, the cash in your account. Almost everything you own that feels safe is, on the other side, somebody else's debt. So when you hear the world is drowning in debt, remember the mirror. Every dollar of debt is also a dollar of someone's savings. You can't delete one without deleting the other. Now it gets genuinely strange. Where does money even come from? Most people picture a government printing it. But that's almost backwards. The vast majority of money isn't printed at all. It's created by ordinary banks the moment they make a loan. In the United Kingdom, the central bank itself says about 97% of all money is made this way. When a bank lends you money for a house, it doesn't hand you someone else's savings from a vault. It simply types a number into your account that wasn't there a second before. New money, born as a debt. So follow that all the way down. If almost all money is created as a loan, then money and debt are nearly the same thing. 2 names for one act. Which leads to a genuinely odd thought experiment. Picture this, just as a way to see the idea. Imagine every loan in the world were suddenly paid back at once. Every mortgage, every business loan, every government bond. What would happen to all the money? On paper, most of it would simply vanish. The debt and the money would disappear together. Because they were never really separate. That's not a forecast, and it's not something anyone is trying to do. It's just a way to see how tightly the two are tied. Pull one thread, and the whole cloth moves. So the real question isn't how to escape debt. It's how a world built entirely on it holds together at all. Here's where most people get the biggest surprise. We talk about government debt like a credit card a country is racing to pay off. It isn't. Big governments almost never pay their debt off. They roll it. When a debt comes due, they borrow new money to repay the old one and push the date forward, again and again. The United States has carried a national debt almost every single year since 1790. Today it stands at over $39 trillion, and no one is seriously trying to make it zero. Why? Because a country isn't a person. A person dies, so a person's loans must end. A country doesn't plan to die. As long as the economy keeps growing and lenders keep believing, the debt can roll forward forever. It's not a bill to clear. It's a wheel that keeps turning. So if governments are always borrowing, who is lending them all this money? Not a person, not even a single bank. It's something called the bond market. A bond is the simplest deal in finance. You give a government money today, and it promises to pay you back later with a little extra on top. A loan written down that anyone can buy and sell. And this market is enormous, well over $100 trillion of loans traded around the world. Pension funds, insurers, other countries, maybe even your own retirement savings, all pooled into the largest lending machine ever built. It's so big that it sets the price of borrowing for almost everyone. The bond market is the quiet giant standing behind every government on Earth. If you're enjoying this, a quick subscribe means you won't miss the next one. Now, back to it. Let's slow down and look at what we've actually built. Your bank deposit is the bank's promise to pay you. The bank lent that money out, so it's holding a business's promise to pay. The business is counting on its customers, their promise to keep buying. The government's bond is its promise to pay the lender. And the cash in your hand? That's just a promise the whole system agrees to honor. Look closely and there's no solid floor anywhere, no giant pile of gold at the bottom holding it all up. It's promises, resting on promises, resting on promises. It sounds fragile, and in a way it is, but it's also why the modern world moves so fast. We stopped waiting for real things to pile up, and started trusting each other's word at a planetary scale. But if the whole world runs on borrowing, then one number quietly controls everything: the price of that borrowing. We call it the interest rate. Think of it as the rent on money. When that rent is low, debt is cheap. Businesses borrow and build, people buy homes, the whole economy races forward. When that rent rises, the same debt suddenly costs more to carry. Projects get canceled, budgets break, spending cools. A central bank can move this one dial, and the effect ripples into every mortgage, every business, every government on the planet. This is the real reason debt runs the world. It isn't just that we owe. It's that the price of what we owe is the single most powerful lever in the entire economy. But borrowing has a rhythm. When times feel safe, lenders lend more freely, and borrowers borrow more boldly. Every loan becomes someone's spending, which becomes someone's income, which makes them feel rich enough to borrow again. Debt builds on debt, and the good times feel like they'll never end. Investors who've studied this for centuries keep finding the same shape: a long, slow wave. Debt rises gently for years, even decades, lifting the whole economy with it. Spending feels like growth. Borrowing feels like wealth. The wave climbs higher and higher, until it reaches a point where there's simply more debt than the future can comfortably carry. And that's the turn. Not a villain. Not a crash from nowhere. Just a wave that rose, the way waves do, and finally had to come down. So what actually breaks? It comes down to a race. On one side, the debt, and how fast it grows. On the other, the economy, and how fast it can produce, earn, and repay. As long as the economy grows at least as fast as the debt, the wheel keeps turning, and nobody panics. The trouble starts when debt grows faster than our power to repay it. There's a way to measure exactly this. Take all the debt and divide it by everything the economy produces in a year. Right now, across the whole world, total debt is more than 3 times the entire planet's yearly output, around $350 trillion. That number isn't a prophecy, but it's the one every central bank and bond trader watches, because it shows if the promises are still growing slower than our power to keep them. And here's the thing, you're not watching this from the outside. You're already inside the machine. The card in your wallet is a tiny loan you repay each month. Your rent helps pay off your landlord's mortgage. The phone in your hand was probably built, shipped, and sold on borrowed money long before you ever touched it. And even if you've never taken out a loan in your life, your government has in your name, and that debt sits quietly inside your pension and your savings. There's no standing outside of it. We're all threads in the same enormous web of promises, which is exactly why this isn't academic. The rules of this system quietly shape the price of your home, your wages, and your savings every single day. So what happens if the borrowing actually stops? We've seen it. In 2008, lenders suddenly got scared and stopped lending, almost overnight. And remember, because money is debt, when new loans stop being made, money itself stops flowing. Credit froze? Businesses that lived by rolling their debt suddenly couldn't. People stopped spending, which cut someone else's income, which cut their spending in turn. The same loop that lifts the world on the way up runs brutally in reverse on the way down. That's the shadow side of a world built on debt. It doesn't coast to a stop gently. When trust pulls back, the whole machine can seize at once. The engine that builds so fast can also stall fast. Here's the calm part nobody mentions when they're trying to scare you. A world built on debt has built-in ways to let the pressure out. History shows the same handful over and over. The economy can grow its way out, earn faster than the debt piles up. Interest rates can be lowered, making the debt cheaper to carry. Old debts can be restructured, stretched out, renegotiated, the deadline pushed. Or a little inflation can quietly shrink what the debt is worth. None of these are magic, and none are free. Each one helps someone and costs someone else. But here's the key idea. A debt-based world isn't a bomb with a fixed timer. It's a system with valves. It bends far more often than it breaks. That's exactly why it has carried us, wobbling but standing for centuries. So, step all the way back. We built a world that owes more than it has. On purpose. Not because we're reckless, but because the alternative is worse. A world with no debt is a world where you can only ever spend what you've already saved. No mortgages, no student loans, no startups, no roads or hospitals built before the taxes come in. The future would have to wait for the past to pay for it, every single time. Debt is the tool that broke that rule. It let us borrow from tomorrow to build today, and then build a tomorrow rich enough to pay it back. That's the bargain underneath almost everything you see around you. So here is the deepest idea in this whole story. Debt is a bet on the future. Every loan is really one sentence. Tomorrow will be bigger than today. When you take a mortgage, you're betting your future self earns enough to pay it back. When a country borrows, it's betting the world it builds will outgrow the debt. The entire modern economy is one enormous rolling wager that what we build with borrowed money will be worth more than what we owe. That's its genius. We get to build the future before we can afford it. And that's its danger. The bet only holds as long as we keep believing tomorrow will be richer than today. The day we stop believing that, the engine stops. So, why does debt run the world? Because debt is the world's way of betting on itself. It's the modern economy in one line. A promise to pay, stacked on a promise to pay, all the way down. And it works astonishingly well, as long as we keep building a future big enough to honor it. But you may have noticed something. That long wave we traced, the one that rises for decades then has to turn, we never followed it down. What happens when the borrowing finally pulls back, spending dries up, and the whole machine shifts into reverse? That has a name. We call it a recession. And almost nobody can tell you what one really is. That's a question for another day. Because every one of these questions comes back to the same place we started. If you like this one, hit like and subscribe. Got a topic you want us to break down? Drop it in the comments. We're here to answer the simple question behind everything. Why money?